Most of those that we surveyed in our own informal polls suggested that the worst isn't over for China's property sector. Where do you stand on that question? Is there more to come? Where could we head from here?
So we do think there's going to be a multi-year structural downturn of the Chinese property sector. Our team was actually on the ground in China in the past 2 weeks trying to gauge the recovery of the Chinese property market. It feels like the recovery is emerging but not very strong. In some of the tier 1 cities after the recent policy easing measures, the transaction volume and prices haven't really seen a very visible recovery just because at the local level there's certain delay of the implementation of the central government's policy. And I think the other thing to note is the general public in China, their expectations of future home prices has dramatically come down. So right now, even with lower mortgage rate, it doesn't make sense for them to take more leverage and buy into a lot of properties.
The fact that we're seeing these issues with Evergrande when it comes to their restructuring process, does that signal that we're going to see similar issues for other developers? Could we see a broader systemic risk here?
I think the incident does not imply that the other developers under restructuring are going to see the same process or are going to be in limbo. If we look at some other Chinese developers such as Sunac, the offshore creditors have just approved the debt restructuring plan and it is going ahead into court. So I think we need to assess the restructuring process case by case, and not everybody is the same as Evergrande. You have to look at their offshore assets, you have to look at the amount of homes to be delivered, and the government will definitely take a little bit of differentiated stance towards different developers.
And Zerlina, of course, we're having concerns rising about wealth management products linked to the property sector, leading to financial contagion into the trust sector as well. You've been on the ground in China in major cities talking to these local mutual funds, hedge funds, and financial institutions. Was there any trends that you noticed that are worth keeping an eye on?
I think few trends that we have observed. First thing is the onshore investors are not very concerned about systematic risk related to property sector spilling over to the financial sector. This because of the troubled trust companies. They account for a relatively small portion of the overall AUM outstanding of Chinese overall trust sector. The second thing is the LGFV or the local government financing vehicle sector. Their funding condition has significantly improved year to date. The onshore investors, including these mutual funds, have been quite aggressively chasing these onshore LGFV bonds. So overall, it seems like the other part of the big outstanding corporate bond market in China, which is the LGFV, has been improving. So overall, I would say the systematic risk from the point of view of onshore investor has abated.
So in terms of those local government financing vehicles, you say the situation has improved, but a lot of them would still be carrying a lot of debt. Which ones are in reasonable shape, and which ones do you look as if they've still got problems?
Yeah, I think for a lot of the weak provinces, government budget is definitely still in a lot of difficulties. But the thing is, the local government as well as the central government are trying to use the bank loans to swap the outstanding corporate bond outstanding of the LGFV sector so as to buy time or say kick the can down the road. But I think over the medium to long term, definitely the huge debt pile of the local government is still an issue for the Chinese economy right now. Buying time is to contain systematic risk, but over the medium to long term, the government still need to face this big challenge of the economy.